Good morning, guys, and welcome to today's edition of the London Session Open. Today is May 5th, 2020, and my name is Alejandro Zambrano, Chief Market Strategist with ATFX. Actually, it's May 4th. We're gonna take a look at the markets that we usually do and see what's happening. We had quite a significant decline in stock markets last week, and we're going to talk a bit about that, of course, and then talk a bit about currency markets and crude oil. If you do have any questions, you can just put them in the chat box and I'll do my best to try to answer them. We have about 15 to 20 minutes now until 10 p.m. 10 a.m. At 10 a.m. we will be wrapping things up. In the chat box, we have Nikos saying good morning. Good morning to you as well. We have Ismail as well. Marvin, thank you so much for joining me this morning. Okay, good. Let's take a look at the markets then, and we're going to begin with the EURUSD. So the euro had a break to the upside last week on May 1st. It tried to push a little bit higher, but it's not surprising to see sort of lack of a continuation here. And the reason for this is that we're dealing with something that is trading sideways. When things trade sideways, they tend to give you a ton of false moves. And again, as long as this overshadows things, it's going to be an issue. I think, as I've been saying lately, maybe push this forward, maybe 15th of May or something like that. Then it's not really, these two levels are more interesting at that point. Then maybe this kicks in. Things might change though. I don't think they will change, but things may change. So I think it's on Tuesday or Thursday. There's supposed to be a court ruling, a German court ruling on the ECB's buying program, and they are against. They're investigating if it's okay by the ECB to deviate from sort of they have an allocation of what they can buy foreign bonds. It's okay if they deviate from that, which they have done. And the ECB has been good here because they come in where governments have not wanting to support. And the issues are these, is question forward. You have fragile countries like Italy, which already didn't have a high, they already had a high debt to GDP ratio. In other words, they borrowed far more than, they have borrowed a substantial amount compared with their annual income. And now obviously the annual income, because of the recession and the lockdown, is coming down, but the debt remains the same. So what happens here is that people become more nervous when they borrow to these sort of countries. And the ECB has stepped in there to keep interest rates low in Italy. And this is the same thing they've done before over the last, I think, 10 years, if not more. Actually, since 2008 or so. And they're compressing the yields. But if the court ruling now says, no, you can't do that, I'm not sure if they actually has to be enforced, but it definitely could dent the euro, because that could potentially cause interest rates on Italian government bonds to go higher, as an example. In fact, it's going to go up in all the periphery: Italy, Spain, maybe Greece, even though Greece has not been as affected. All countries that are more fragile tend to see that sort of move. So that's important that we're going to take a look at that. And again, technically, if we take out 101.17, we might go a bit higher to maybe 111.48. And if we take out 107.25, we can go a little bit lower. Of course, we have a bit of a bullish uptrend, but otherwise we're trading sideways. You can always, if you want to, you can flip to the 5 minute, and 5 minute, you'll see a bunch of stuff happening. Like you got yourself a breakout here on the ECB rate meeting, but I stopped trading that short term. GBPUSD, this one is also trading sideways, but here as well. But what's a great thing with this pair is that it's actually doing so in a very interesting fashion, and is forming a very nice and interesting pattern. The pattern is an ascending triangle. If we take out 126.48, we take out the double tops, we can probably go higher, and that is what my preferred way of trading the ascending triangle, which is on the break to the horizontal level. We could, of course, just break the trend line and go a bit lower, but the break of trend lines like these ones that are upward sloping or downward sloping is difficult, because you don't know, maybe someone is doing it like that. There's different ways of drawing trend lines, so that creates confusion around the actual levels. So I would wait to be bearish until we take out 122.44. There's always alternatives. There's always so many different ways of trading a market, and if you're super bearish, you can sell maybe at 126 with stop losses just above. But my preference is wait for it and wait for a bullish breakout, alternatively a bearish decline. If we indeed go lower, then we can probably do something like this, and then this will be a target depending on where that break happens. But even if we take out that level, I would wait for a break to the horizontal level, which is at 122.44. Dollar versus the Japanese yen. So this has been a bit boring, but we said for a long time here in April that if we take out the low, we're probably going to go a bit lower. And we did go a little bit lower, then we went a bit higher. And for now, the trend remains bearish below 107.78. No change to the outlook here. Of course, maybe this will swing a bit higher. Maybe you get a better entry at 107.20 or something like that. But sometimes if you try to optimize, you might miss out. What else? Gold prices. So this is gold prices. So we said buy at 16.91. We're in profit now. The market is 17.05. It might go a bit higher. Hopefully it will continue to go higher. I would just keep an eye on this one. And obviously if it continues to go higher, then that's all good. Otherwise, I think there's room for optimization here on the entry bit. It could be a situation where if we do start to swing back lower, imagine if I was not long, where would I be buying? I would prefer to buy at 16.81 instead of buying at 16.91. Problems with optimizing sometimes is that you might not get the attempt to get in the market again. But overall, I'm bullish. The question is 16.91, if that's going to be enough, or if we're going to have a retest of 16.81. And if we do have a retest of 16.81, I think people are going to be buying there. And I think stops for these people, they're placing them probably under 16.56. That's what I think people are doing. Crude oil prices. So crude oil prices had, this is the June future. That's why it probably looks a bit different. This is what people are actually trading. So 1%, 99% of all trading in this contract don't go to expiration. Expiration was what happened last time. It actually happens every month. And that is when the contract needs to be settled against crude actual physical delivery, or you actually physically need to buy it. And what happens here is that last time there was not enough storage. So you had a lot of people like ourselves that are in the physical part of it. 99% of us actually in the contract, in the volumes that couldn't get out, and this is where we had that big slide. So since the market actually bounced and we've gone upwards, we took out that short-term high here, but we are correcting in a wedge. The trend is obviously bullish above 996, so it might go down and then maybe push a bit higher. But we're gonna probably do something like this, and I will be careful because at one point it might be a situation where we just cut straight through and go lower. So should we be selling here then? Well, it sure looks like it's trying to move lower. I wouldn't pay too much attention to that though. I do want to check with the trend, so I wouldn't really sell here. But obviously a break to something like 17.98 can start to push us a little bit lower. But if someone put a gun to my head and said, you need to buy, you need to sell. That's a good question actually. I prefer not to do anything here. I prefer just to wait and just see what happens. But I think we cannot go down, and then maybe from here we can buy, attack the upside. All right, let's talk a bit about what happened with markets. Okay, so we're gonna actually use the FTSE 100 as an example. So this is the FTSE 100, but the same thing happened in the Japanese stock market. All the US futures and US stock markets happen a bit. It didn't happen in CAC 40, but it did. You just have some slides, and obviously in CAC 40 now as the market opens. But what happened is, here's question forward. So on Friday we had a massive move. Okay, so we had a bullish move. Myself, I bought down here, booked profits here, and then the thing came down, collapsing. I thought it was gonna bounce from 6,000. Instead, the market went down, and then you have closure in Europe, and if you just look at the 1 hour, it was just like a situation where it went lower and lower and lower and lower and lower, open for a new day, lower and lower and lower. And that will happen sometimes when you have long weekends. When liquidity dries up, very few people can dictate, just a few people can dictate price action. and the sellers totally dominated. Now it's difficult to know, guys, because sometimes it goes the other way around, especially in currency markets. The euro dollar can go up and up and up and up and up. Sometimes it goes down and down and down and down, because there's so little liquidity and it struggles much more to find equilibrium. So this is, I think, is what happened here. And then I think as well, you know, you had some people that were looking at the market and said, oh, this is a good time to short sell. And if you look at it from a weekly chart perspective, then yes, some of them actually, they managed to actually create a reversal of bearish candle here on the weekly. And that's definitely a warning sign. And we might potentially start to roll over, but we're not, in the short term though, we're not seeing that properly yet. And I don't really trust single individual candlesticks. I prefer just going to trend. And if you look at the short-term trend, for example, like the FTSE 100, then yeah, we took out this high, but the trend does remain bullish above 55.95, and I do think we're gonna probably swing back up to 5,900, and I think we're just gonna go up to 6,000, maybe even higher at one point. But it's definitely a bit fragile, and some markets you're starting to see how things are starting to roll over, but it's not here yet. Look at the German DAX as well. I had an idea to buy here. And this area here, the stop loss was here. We even gapped below that level. And we talked a bit about this on Friday as well when I did a market update. So we got below that level. But if you look at this today, you know, you got a good night's sleep, hopefully. You know, we're just above support. So we did have a total correction, which is not a good sign. But we do remain above 10,152. So realistically, we will probably trade higher. We never know. So, but I do think we're going to trade higher, and technically the trend remains bullish above 10,152. Because what happens is that you have short-term trends like this one and this one, and then you have the big picture, and the big picture is this low here, this low here, and this low here. And as long as you do trade above this low here, which is 10,152, then this market could probably trade higher. If you look at the S&P 500, S&P 500 as well had a scenario where I wanted to be bullish from here and it stops here. And I said, look, if the market is just coming down and crashing on us, there's very little we can do and little thing we should do. If you had, for example, like stop loss orders in place where you put your normal risk on, it's always better to take that loss. It's not good to add more risk to it unless it's within what you can do. So in the case of my FTSE 100, I risked 60% of what I usually risk. So I had a 40% leeway there, wiggle room, which allowed me to push down the stops a bit. And that's what I did. But if I was risking with my normal 100% risk, I would have just taken the loss. And that's the most prudent thing to do. Because remember what we did here, right? The trend was bearish, and I showed you on the charts in the S&P where we could sell. A few times, of course, I was bullish, but most of the time I was bearish. And then at the very end, the trend flipped on us and turned bullish, and then we turned bullish as well, and we went with that, and that went really well because we said look to buy down here, and then we said I think buy here. It was a few places I said look to buy. And the idea is, as long as we have it something like this, we have like, it doesn't have to be that we have, I mean, obviously this was a very nice move of 35%. We don't have to have 35%. What's important is that you have a solid trend. Like in the Aussie dollar as well, I had some few setups and they worked out good. So the key point is here, as long as you have that, like a month of bullishness or a month of weakness, then we're cool. But at the end, we will give back profits. It's just the way it works. And that's why we need to ensure that when we give back profits at the end, that we don't lose the house on that. We can't bet too aggressively throughout, but we can easily make money throughout this period here. And that's what I would suggest. Okay, let's see if you guys have any questions. So let me know what you think about the audio today. We did have, I noticed we had some issues with the audio, and so I'm just gonna see if you guys have any questions. All right, good. So we have a few good mornings here. So we have Liz, good morning to you. We have UK Kenny, haven't seen you for a while. I hope you're doing good. I think it must have been You've probably been watching maybe, but the first time I see in the chat box, I think for quite some time. Well, Antonio Jimenez, I hope you're doing good. I hope you enjoyed being able to go out. I saw some pictures from Barcelona. There was looked to be quite busy. Latifa as well, good morning to you. I hope you're doing well. And we have Maurizio. I hope you're doing well as well, Maurizio. And we have HTM Moyo saying good morning, everybody. And Yuki Kenny saying, can we take a look at Euro Yen? Yes, let's take a look at Euro Yen. I haven't watched Euro Yen for some time, so let's take a look at it. It's a 4-hour chart. So we can actually clean this up a bit here. Let's actually take a look at the daily. Okay, so this is your daily chart. And on your daily chart, you had low here September 2019. You had a low here on March 2020. Another low here in April. Then we did try to trade lower, but we didn't really succeed. And in fact, we got pushed to the upside. If we look at this today, you have a double top here. I am not sure how to deal with this one. But let's keep it simple. I can't see a definitive good pattern here. So I wouldn't be too aggressive, but I can see this. If we take trade below 115.35, we'll take out these lows. We could probably have more of a bearish bias. This is not 100% way to do it, but just to give you a bit of an understanding, you got a double bottom, and the double bottom is technically here. This is where that line is. Let's ignore. We have that, which is important. Check out that level, and that's important. But you have the double bottom here. So if we do trade below 116, that will be an indication that that double bottom is working out. But because you have a low just here, that would not be the trigger point. The trigger point would be a break to 115.35. So take that out, then we can probably go a bit lower. That is what I will watch. In the meantime, you can see we failed to actually trade lower here. And we had in fact a very bullish reaction. And I reckon if we go down, we can probably push a little bit higher. So what I would focus on is to be bearish on a break here. You could, if you really wanted to, as well, go against and try to buy here, but I would advise against that. Actually, I'm not allowed to advise, but I would not do this. That's what I'm trying to tell you. Maybe what would be better here, and what my preference would be, is to look at this high here. That's a high, and then you have that high here. So we could potentially go down, up, and then if we settle more, we can probably have something like that. How is it going to play out? I don't really know. But if stock markets indeed continue to go higher, then we should be trading upwards. The alternative is if stock markets break below support, and as you can see in the S&P and in the German DAX, we're quite close to support, then this could start to drift down lower here. But there might be better yen pairs in that case, because both the euro and the yen are acting a bit like safe havens. So you have that battle there. Maybe try to combine it with the Aussie dollar, try to combine it with Canadian dollar, for example, has problems with crude oil or something similar. Okay, guys, 10 a.m. So I need to leave you guys. I have another meeting coming up here, so I need to get going. Too busy. Alex says, let's walk. Let's watch the curve. Yeah. Okay. Cool. I understand. All right, guys. Have a great day. Don't forget to like here. You can like the video. Give a thumbs up. You can leave a comment. If you're watching the recording as well, that's important. As well, don't forget we do offer some free premium education with an ATFX account. You get that included. And also, we are working with them on one-to-one coaching. So you do also get one-to-one coaching with an ATFX account. You can have 2 hours with me, 2 hours with Angeline, or 2 hours with Nicholas, or 2 hours with Crispus, or Eno. So if you want to know more about the other guys, you can just read their articles. You can also go to About and Investing Cube authors to check out more of their content. Effectively, you get 2 hours. You can also buy your own coaching sessions if you wanted to. You can buy them directly on the site. I get a notification. I put you in touch with whoever you want to speak with. The conversations are over something we call GoToWebinar, alternatively Skype, and that's it. You can learn more about both of these things here, up here. Okay, guys. Yes, a final thing as well. We do have something coming up. Actually, tomorrow, May 5th, we have a special event coming up with ATFX as well. So ATFX has invited 2 external speakers, and there is going to be a talk from 9 a.m. So tomorrow I will not be live. Actually, I will be able to be live. I'll take that back. But the actual session starts from about 9 a.m. until 1 p.m. So it's a good opportunity to get input from 2 other traders and hopefully broaden your trading horizon a bit more. Maybe we can pick up a few things. I haven't seen these guys speak before, so I'm going to be interested to see what they have to offer and see if they can somehow help me understand the markets better. What I'm going to do right now is going to put that link on Twitter, and if you want to know what my Twitter is, then just go here on AlexFX, and if you're watching this on Twitter, sorry, on YouTube, then that's my link. You just click on that link, you'll be able to follow me, and I'll put the link up right now. Okay, guys, have a great day, and I'll see you guys. I'll see you guys probably tomorrow. Thanks so much, and I'll see you guys soon. Bye bye.